Germany's ZEW data release surprised on the downside when it came in at 1.9 today, much lower than the 5.9% forecasted. This time last year, the reading fell below zero before rising back up again. Well, joining me on the line now is Kallum Pickering, Senior UK Economist at Berenberg Bank in London. So Kallum, do you think we could see a further decrease next month?
It's quite possible that we see another dip. The VW scandal, refugee crisis and emerging market risks will have weighed quite heavily on sentiment this month. The VW scandal is unlikely to endanger German growth, and indeed the effect of refugees on the German economy could be positive due to the fiscal stimulus that will be required to handle the extent and number of people that are arriving. The EM risks could pose a more sustained threat, and the sentiment index might reflect that, but it's a little bit hasty just to interpret a soft patch of data as a potential slowdown, even if we saw another drop next month. As you mentioned, last year we saw the index fall below zero before rising sharply again.
We saw weak trade data from China last week, and it looks like this is starting to resonate with Germany now. So in your opinion, what's in store for Germany's export-orientated economy?
Near term, it could soften. You mentioned the China data showing a softening. Well, we're going to see this probably as a result of the China slowdown, weakness in emerging markets. The latest orders data for German exports saw non-European Monetary Union orders down quite sharply. But the data also showed a steady increase in orders from within the Eurozone. Going forward, this is likely to persist. We're going to see growing strength, particularly from the periphery, raising demand for German exports. So within Eurozone exports will bolster demand going forward. For everyone else, well, ECB action in the form of QE will keep the euro competitive for some time. So outside of the European Monetary Union, demand growth probably remain firmest in the UK and in the US, but remain weak, towards the developing world.
Germany's year-on-year inflation in September came in at 0% today. Current conditions weakened in October, and of course the ZEW Economic Sentiment Index plummeted. In light of this, do you think that the ECB will adjust its monetary policy in the near term?
Yes, it's likely that they will adjust their policy in the near term. There are three ways in which they could do it, and I think there'll probably be a combination of the three in some form or another. So just to quickly run through, the ECB could increase the stock of purchases per month. So if they did that, what are they saying? Well, the ECB is putting a firm arm against any of the downside risks which could be manifesting in the short term. That's going to send a strong signal to markets that the ECB is behind it. So apart from today's data and the ZEW index, we've actually seen confidence picking up quite nicely in the Eurozone despite some risks to growth. The ECB probably views this as hard gained and would like to preserve it if possible. So yeah, an increase in the stock to put that firm arm behind growth, that's quite likely. The second thing the ECB could do is they could extend the purchases. Now, if they did that, what are they saying to markets? Well, they're saying to markets that they're here for the duration. It helps boost inflation expectations over the long term, and for indicators such as unemployment, which have been stubbornly high and might take a while to improve, the ECB is firmly behind those over the long term. So extension of QE, it could be highly effective. And the third thing that they could do, and it might be necessary if they do a combination of the first two, is broaden the range of assets which they could buy. This is actually quite important. If there are any worries that the ECB simply cannot buy enough stock, this eliminates those fears, and it matches the ECB's willingness to be aggressive with QE with its capacity to do so.
The euro was trading higher this morning against a number of currencies, but how have the data releases affected the euro, and what is your outlook for the euro dollar over the next 3 months?
Outlook for the euro dollar is that it will remain stable. I think it was quite puzzling to markets during August and September when it was quite prevalent that China risks were emerging and the EM crisis suddenly became quite acute. The euro strength improved. Now, why did that happen? Well, I think the policy which is going on within the Eurozone is what's behind this. So strong ECB and fairly neutral fiscal policy, given that most of the austerity has taken place already. So when markets look at Europe, they say, well, if there is downside risk to growth, here is a place where the policy levers are there to pull if necessary. And of course, we already have the ECB doing one of those. So even against the dollar, if we see the Fed raising rates before the end of the year or next year, you'd expect that to put an upward pressure on US dollar versus euro. But because there's expectation that policy is there in the Eurozone to be behind whatever happens, it is likely that we'll see some stability. It will offset any of the gains that you might expect as a result of contractionary policy elsewhere, such as the US, United States.
Well, thank you very much for your comments, Kallum. That is all from me for now. Goodbye.